Welcome back. You're watching Business Morning on Channels Television, and today on the program we're looking at financing the future. I've been having a conversation in the last couple of minutes with two financial analysts, I'd like to call them that, the Group Head Development and Project Finance of Heritage Bank, Olusegun Akonji, and Johnson Chukwu, the Managing Director, CEO, Cowrie Assets Management Limited. Both gentlemen are still here with me in the studio. Thank you so much for staying with me. Well, just before we went on that break, Mr. Chukwu, you were talking about microfinance banks, and Mr. Akonji says that the requisite institutions have not been put in place to ensure that they're strong enough to do what they're supposed to do. So I ask, for businesses, doesn't matter if they're small, medium, or large, do they always have to come to the microfinance banks or the lenders, the big lenders, or can't they just go to, for instance, the capital market to source for funds? Because, believe it or not, to ensure that you have adequate growth, you can raise funds from the capital market. But it seems that not a lot of businesses are taking that option. Why?
Like I noted, the first thing is you find a business without collateral. But truly, the first collateral in financial services really should be identity. I should be able to know where you live. But today, you ask yourself, where does an average Nigerian live? You can't. People change accommodation like changing clothes. So if this guy gets money from you, it moves to another accommodation, you can't find it.
So does that make it impossible for them to get funds from the capital market?
That is the basis. That's why an institution needs to hold something before giving credit in the first place. Before even standing to say, I want to take you to the capital market and raise, because I'm going to put my identity behind you to raise money for you, whether locally or outside of Nigeria. This is why larger institutions are able to get funding outside this market or establish themselves locally and get money. But if I look at it today, graciously, the Nigerian Stock Exchange, they're beginning to resuscitate the second-tier exchange. And then also we have the structured OTC market now, which should actually enhance, like the London HIM, the opportunity for small businesses to get listed on the OTC market, NESD, and be able to project themselves, provide financial information about the institution that are at least near credible information that can enhance the opportunity of financial institution to support them, putting their reputation behind them to get money for them on the capital market. Now, once I am not able to achieve those basic things from your business, for example, many businesses do not even understand the economics of their businesses, business owners. So they understand the technicalities of running their business in terms of, maybe I own a bakery, so I know how to make bread. But what about the economics driving the making of bread, which is what delivers it to the average person on the street that's going to eat the bread? How does the numbers add together and ensure that I have a cash flow that is sustainable to repay my obligation? These are critical things.
Okay, so now let's look at the option of using the private equities market,
Okay.
Mr. Chukwu. He says that a lot of businesses, most businesses do not even understand the economics of running their business. And so, of course, it always begs to reason that if you do not understand it, how can you explain it to somebody who you want to go and actually help you to make money? So if, for instance, that happens, and of course there's also the challenge of collateral, if that comes up, can such businesses use the option of the private equities market?
Okay, I'm sure what he said is that they don't understand the business, the financial reporting or the economics of the business. Not that they don't understand the technical aspect of the business, which they actually explain that they understand the technicalities of the business.
Yes, they understand the economics of running the business, but not the technicalities.
What that means is that the operators or the business owners may not be able to determine that holding the stock for a particular period of time could lead to obsolescence, could lead to high their holding costs associated with keeping their stock for a long period of time. And that cost may actually outweigh the profit margin they are waiting for. So in effect, a business could see cash flow, but it's not actually making profit. And we've seen instances of Nigerian businessmen whose cash flow was huge, and they began to live lifestyle that are in consonance with the cash flow, but not in consonance with the profitability of the business. And they end up wiping out whatever amount they have borrowed from the banks. Because when they borrow from the bank, they seek a lot of cash flow and they think that's his profit. So in that case, they don't understand the economics of their business. And that's what they're referring to. But back to what your question is that if they don't understand the economics of their business, can they access funding, particularly from the private equity? If they understand the technicality of the business, their job, the next level is that they need to engage financial advisors that will help them prepare documents that will reflect the economics of their business. So without the economics of the business, it becomes difficult to lend to or provide to access funding, because you must have a bankable business. You must have a business that could show that though you are making losses today, that when you achieve economics of scale, as so and so volume of you break even, and then you begin to make profit. Because even the private equity investors are not charitable organizations. They are actually looking for profit. So they will come into business that they can see growth opportunities, that they could actually see the prospects are very clear. So in as much as you may have the technicalities to understand what you want to do, have a clear vision on how you want to grow your business, but you also make sure that you have the financial structure to make that business profitable or viable in the long run. But taking it back to the issues we're discussing, which is financial inclusiveness. You know, when you talk of financial inclusiveness, you're talking of those who are currently outside the financial dragnet, that are completely excluded. The people who are accessing funding from the capital market are already financially included. But when we're saying that, can we grow their businesses by giving them access to longer term funding? And like he did say, you already have issues like alternative securities market access that is supposed to help companies that are not really big enough or do not have the financial reports to assess the members to get listed.
But then if you've noticed in the last couple of weeks, that particular index hasn't moved. It's been unchanged. It's as if most of the companies on that, listed on that index are not even really performing.
Yeah, a lot of things are going on. For now, the Nigeria Stock Exchange is appointing more designated advisors, of which Carl is one of them. What they want to do is get advisors to work with those companies that are currently listed on the SM to guide them on what to do. The designated advisor, also supposed to bring in more companies that qualify for listing in SM into the market. So by the time you have a reasonable number of listed securities on SM, alternative security markets, they will market. You create a market that will create market. Today we still have very few people. We have few people who even understand that there is an alternative security market. But as more designated advisors come on stream and they work with the listed companies in the alternative market, and they also help bring in more listed companies, then you're going to see more activities there. One of the things that drive market is liquidity. You do not have liquidity when you have very few stocks. So but the more stocks you have, the more liquid the market will be. Today, that market segment may not be as liquid as it's intended to be. But ultimately, as more operators come into that market, get listed, then you are going to see more liquidity, and then you'll see that movement you are talking of.
Mr. Konji, so based on this conversation now, what do you think is actually, what kind of workable plan should Nigeria be looking at in terms of trying to promote, to drive financial inclusiveness? We've talked about the microfinance, we've talked about the role of some of the other agencies, we've talked about the capital market, we've talked about private equities market. Which one, or any of these ones, if none of them, is a viable option for Nigeria to pursue?
Like I've always stated, I will reiterate again. First and foremost is create the facility that will make the current institutions functional to bring in all these people in. How do you make them functional? Ensure that the identity system works. So I can, like the NMIC, make sure people can be identified. Once you can identify people, you can know where they live. People don't jump from house to house. You can give them money and find them where they live. You need to establish that. That way, whether you are selling on the roadside or your shop is on a gutter, anywhere in any market, you can place money in that person's hand and find that person where you're looking for that person. That way, the person is able to pay you back. That is what will make financial services open to everybody. Once you solve the issue of identity, the next level is that we create a platform where people are able to boldly go to institutions, whoever you are. So the cost of collateral alone, it's huge. That's why people are unable to provide them. But when their identity becomes their first collateral, they will get money from the banks. Then next to that is that government should ensure in itself to provide a facility that works. Government has to sponsor. Every economy is driven first by government. You provide an enabling system that the private sector leaps on and then start to engage from there with people. So the government would open up a funding system that is beyond just looking at placing money in people's hands because they want to import stuff from UK or from anywhere. That would localize investment. So we look at industry, structural definition for funding industries. Look at the leather industry, what do they need? Place some money around it. Let banks take over that money and then deliver it to people. We can monitor them and then we can add our own resources to it. Look at any industry we want to make to grow. Look at what the Minister of Agric is doing with Agric. Now, the value chain of Agric is becoming very much understood by banks. So we need to look at that kind of thing, take it by sector, put in some funding to ensure that it becomes attractive for the entire financial institution to embrace, industry to embrace. Once we embrace them, we will expose resources to them, and then we'll be able to support them. It's at that point when your local financial industry supports you, that is when private equities want to come because they find you attractive, because you are fully established in a way. That is when some foreign funders want to look at. Without advertising, institutions get funders from abroad coming to them because they've seen certain visibility and transparency about the management of the institution. Once we are able to give them that base, people will come from far and near to support these companies, whether they are on the local exchange or they are not even listed or we are in preparation to get them listed, or we need to provide the credit for them to get the things that they need moving on. So once this is set, you will see that whether you are an individual or you are a corporate, a small corporate, a business name, people, institutions, because banks want to, that's where we make money from. Anyway, as an advisor, that's where Mr. Chukwu makes money from.
Well, I was just going to ask him if he actually shares your
that's where he's going
opinion
to make money
on all
from.
of
If
this.
that is not provided, he can't make money. I say bank, we can't make money. Where is this money, the 40 trillion that we're talking about that is available in that bottom of the pyramid? The 108 million Nigerians who possibly are excluded from financial services opportunity, and they have about 40 trillion in their hands. If that is what they have, that's a big market. We want to go there and get the money. He wants to provide advisory to some of the over 17 million SMEs. Where are they? These are the things we need to deal with. Once we have a system that is able to help those institutions to leapfrog beyond the primary base, banks, they become attractive to banks.
Okay, Mr. Chukwu, please comment on this. One of our viewers just sent in a tweet, says we should consider creating a capital market that will be specifically for small businesses. Is that what?
Well, that's what alternative securities market is.
Yes.
So that market has already been created.
Yeah.
But
Does exist. Like I said, more designated advisors have been appointed. More companies are going to be listed on that segment of the market. And as more companies are listed, the liquidity in the market will improve and more interest will focus on that segment of the market. But just to add to what he has added, you said you wanted to find out from me if I agree with him. I absolutely agree with everything he said. But I also want to add some other low-hanging fruit that we could actually immediately begin to explore. Like what we're talking about is financial inclusiveness. And like I said earlier, we're trying to bring in people who are outside the financial system into the system. We can leverage on what the traditional systems that are already operating in the country. I'll give you two of these instances which we could leverage on. You have the cooperative systems. If you go to most urban locations in the country, you have on every Sunday, every weekend, group of people in the same trade, on the same neighborhood come together and contribute money to save.
Ajo, that's the local.
Yeah. Okay, so what they do is that each person will determine what he wants to be saving, and they have a financing system where they have secretary and all those things that keep those monies, and then they build a pool of funds and they lend to themselves. So when they lend to themselves, they end up, because before they lend to you, you must bring other members of the cooperative to guarantee you. they guarantee you with the deposit the contribution they've made. So if you default, they forfeit the amount they have contributed. So that way, it becomes difficult for you to default, and also becomes difficult for the cooperative to lose money. So you find that every year they declare dividend for them, their customer, their members. We can leverage on that and make these cooperatives agent banks. You know, Central Bank came up with agent banking system. These groups can actually be agent banks and it be integrated in the financial system. They have a way of including so many people. These people I'm talking of are completely outside the financial system. They have their own parallel financial systems, which we are unable to tap into. Then you have to have the SUSU scheme. These women and men that go around the marketplaces and collect deposits from market traders. And then they also learn from that deposit pool of funds they've generated. We can also make these agent banks. Then we need to address the issues of access to collateral. There are small-time land owners in the villages that cannot pledge their assets because they do not have titles to those assets. We need to find ways of allowing decentralizing the issue of certification of land titles so that at the local levels, probably local governments could give rights to these assets. And then you also have to look at what like I mentioned repeatedly, the issue of Equity Bank of Kenya. The farm produce that we produce, the farmers can actually use these things as collateral to access credit. If we look at these existing structures, I'm sure we'll be able to include more people in the financial system.
Well, it seems as if work is cut out for most of the participants who are going to be at that meeting next month to, take home these ideas and see how they can work with it. But thank you so much, Mr. Olusegun Akonji, for coming on the program this morning, and Mr. Johnson Chukwu. It's been a pleasure having both of you.
My pleasure.
Well, I've been speaking with the Group Head to Development and Project Finance of Heritage Bank, Mr. Olusegun Akonji, and Mr. Johnson Chukwu, the Managing Director, Cowrie Assets Management Limited. And we've been looking at possible ways of financing the future. Of course, we know that the World Economic Forum Africa meeting comes up next month, and it's based on the theme, or it's focused on the theme, forging inclusive growth and creating jobs. And as much as possible, participants at this meeting are going to be looking at ways of how to forge inclusive growth. Of course, we know that's the focus, of course, of the government in terms of its transformation agenda to ensure that there's more inclusiveness in the growth of the country, and of course more jobs are created. And of course the gentlemen have made valid points I'm sure we're going to sit down and ruminate on and hopefully move the economy forward. But that's the program for today. Thank you so much for watching. I'm Harriet Tagbingi.